Hey guys, good morning. Welcome to your mortgage rate forecast for March 29th. This is Criss, and let's get started with reports. Here's what we have. Mortgage bonds are looking pretty good today. So are stocks. Markets are going to be closed for Good Friday tomorrow, and markets are going to be closing a little early today, about 3 hours early, 2 o'clock Eastern time. As far as reports go, personal income and spending came out. Wasn't so bond friendly, but the bonds are doing well because the Chicago PMI and the Michigan sentiment, along with the PCE, came out better than expected for bonds. So we're having a pretty good day, and we're right at the top of the trading range. Let's get to the charts. As you can see here, we're still maintaining this flat trading range, which is just great to see. Such a relief after just the rough month of January. Currently, bonds are trading at 102.56 versus averages closer to about 102.90 last month. So Freddie should be coming up with an updated number here shortly. But for February, Freddie said the average consumer is at about 4.33 at 0.6 points for their commitments. So obviously consumers are going to be paying more right now for that. But obviously 4.33 still is attainable with more points. As far as the forecast goes, here's what we have. My last projection was a hit, which is really nice to see because we're staying right within this trading range. As far as analysts go, what are the forecasts? Well, the forecast is pretty simple. We all think that it's going to stay pretty neutral for this coming week. But again, all the analysts are still very bearish on bonds, thinking that bonds could see some more sell-off in the coming months. Now, a lot of this has to do with the inflation. Inflation is like the arch enemy of bonds. If you're an investor and you're investing in a 4% bond and inflation's at 2%, your true yield is only 2%. 4 minus 2 equals 2. So here's where we're at. Right now, inflation came in at 1.8% versus last month's 12-month moving average at 1.7. So we are seeing inflation going up, getting closer to the Fed's target of 2% inflation. But here's the thing. Core inflation, which takes out energy and food, the reason why that's really important to the Fed is because the Fed can't really adjust the prime rate, the Fed rate, to really impact those things. So if we take a look at core inflation, which does not include energy or food, that went up from 1.5 to 1.6. But here's the thing, guys. Last March, those inflation levels were very low. And then when we take a look at what's going to happen projected in April, if we just stay the same as where we're at and we don't go to a higher inflation level like we've seen last month to this month, here's what we got. Now, in April, when last March is taken out of that 12-month average, we're probably going to see inflation jump. Now, nothing too crazy, but when traders are looking at these numbers, they could get a little shell-shocked. But we take that and put that on top of what I've been talking about for so long, which is quantitative easing, the federal government investing less and less money into the mortgage-backed securities. They're going to take out more money in April. So I think between the inflation that we're going to see, the averages that we're going to see next month coming out, plus compounded by the quantitative easing of the federal government, I think bonds could have a tough time next month. So if you're in a position to lock before next month, I mean, watch the market do your thing, but all of us are kind of nervous about April bond trading, okay? So anyway, that's kind of a longer term forecast. Sorry, I don't usually do that, but I hope that helps you guys. And here's my short-term forecast for this coming week. I believe bond trading is going to stay the same trading range that I said last week, which is going to be 102.75 to 102.10. Again, guys, we're currently trading at 102.56. So if you look at this, we are pretty darn close to the top of this trading range. And so I say, if you like it, lock it. If we can see some bad economic reports, we could break out of that trading range and get above that 102.75, but it is going to be a tough ceiling, guys. So that's where we're at this week. So leave your comments down below. We'd like to hear from you guys. Have questions? You have a unique situation? We respond to all of our comments. And don't forget to hit that like button before you go. Hey, and if this is your first time on the channel, I have to say this. Over at the top left, you can click on that guy and you'll get subscribed. Just get a little alert when we release new content. And as far as this bond chart stuff, and if you're just a consumer and you're like, man, how do I just get the best mortgage rate? I want to lock in at the right time. Go ahead and click at the top right. That will take you to Mortgage Bonds 101 and teach you the basics that you need to know as a consumer when you're trying to pick out the best time to lock in your rate. Okay, that's it for now, guys. Have a great week and happy Good Friday. Take care. Bye-bye.